Hey everyone, this is Dave Silliman here. Today again, like always, talking about qualified opportunity funds. Today the topic is going to be, what is a qualified opportunity zone business property? So let me kind of clarify a little bit. See, as an investor, you get either stock, you get a partnership interest, or there's what is classified as qualified opportunity zone business property. That's a little different. It's a little bit different for the guidance. It's very unclear right now how this is going to play out with the Treasury, but I'm going to do my best to try to explain it to you. So there's three principal aspects of it, and then I'm going to break down where I see the issue is going to be at, especially for investors. So here we go. First principal aspect of it is this, is that the business property itself is something that is tangibly used and acquired after December 31st, 2017. So we're already in the 2018 for the most part. It's only applying to using the qualified opportunity fund investments into a qualified opportunity zone business property after 2017. So if you're already a business and you've got a piece of opportunity zone property, this does not apply to you. You cannot get away with this. It's not going to fly, I think, with the IRS. The guidance is very, it's gray and hazy, but there's enough there to at least say that if you've got a property and you didn't acquire it using the fund after December 31st, then that property does not qualify under this aspect. The second piece of it is this, is that the original use of the property in that zone commences with the fund or the fund itself investing in substantial improvement into the property. So what does that actually mean? It means this. I'll give you a prime example, okay? Working on this Sakari Lux hotel deal. The Sakari Lux Opportunity Fund is available for investors. If you want, check it out, sakarilux.com. It's with the SIKARILUXE.com. But this is a really good example, though, of how this fleshes out with qualified opportunity zone business property. All right, the property was acquired after December 31st. It's being acquired using qualified opportunity funds. There is substantial improvement into a property right now that is not being used at all. And so therefore the original use of the property under the substantial improvement with the investment has to be used for what the original use was. In this particular case, it was a cigar factory. So we were good, check criteria, and doesn't qualify, right? That's why we're issuing qualified opportunity zone stock, because as a qualified opportunity zone business property, the original use of the property in the zone commences with the fund or the fund substantially improving the property, and last but not least, during substantially all of the time that the fund's holding period for the property. So let's say it's a 10-year fund. You got to have that property for 10 years. Substantially all of the use of the property was in that qualified opportunity zone. It's a little confusing. If you had a hotel that was already a hotel, it became vacant, you rehabbed it, it became a hotel again, it meets the original use criteria, it's being used as a property in that zone, meets all the criteria. This is one of those areas where guidance letters have been resubmitted back to Congress for more clarification. If it were me as an investor, I would probably not be looking at putting money into something that is going to be a qualified opportunity zone business property. Not unless you're establishing a fund, you found a piece of new property, it's going to be basically your main office headquarters, and that's what it was originally used for, and that's what it's going to be used for moving forward. In that case, then yes, that type of property would qualify. But from an investor standpoint, looking for a rate of return on something that's going to be physically used in the operation of the business, don't know if it's necessarily the best spot to be able to put the money into, unless in the future that there's enough substantial improvement that there's going to be a high enough ARV on that in the future. But beyond that, I would probably steer clear of them, but we're going to continue to keep educating on everything that there is to know about these opportunity funds, kind of dissecting them inside and out. If you want to find some more information on Qualified Opportunity Zone projects, on Qualified Opportunity Zone funds, and even service providers, people like myself who operate as an executive consultant, where I go in and I help these businesses, these corporations, either get themselves set up and get these funds set up. I'm responsible now for establishing several $100 million in funds, quickly approaching almost $500 million now, and working with several of the large tax outlets across America, doing education and teaching and training on these qualified opportunity funds. You also can find more out about the Sakari Lux Fund itself, which is an open fund available for investment on SakariLux.com. That's www.SIKARILUXE.com. And if you're looking for a consultant, you can, like I said, you can find me on opportunity-funds.com, or you can check out my website, EasyDoit. That's EasyDoit.com. I do offer a free 1-hour consult for people that are looking into these qualified opportunity funds. But until next time, this is Dave Silliman signing out on Qualified Opportunity Funds.